Bitcoin, the world's first and most widely used cryptocurrency. Its recent public exposure and continued volatility have prompted me to further examine this medium of exchange. This video will analyze Bitcoin's role as a store of value and its future standing in a world currently dominated by fiat currencies. Let's take a deeper look at Satoshi Nakamoto's creation. Welcome to Austrian Markets. For nearly a decade, central banks around the world have been debasing their currencies. Radically expansive monetary policies have all but fixed the structural problems in the global economy. Artificially low and negative rates have fueled malinvestment booms, which have hurt the middle class and inflated bubbles across global equity markets. After the financial crisis, taxpayers were forced to bail out insolvent banks and corporations. But after accumulating trillions in debt, the question will not only be who will bail out the banks and corporations during the next crisis, but who will bail out their governments. The answer to that question will be bullish for precious metals and Bitcoin. When central banks inevitably lose control of interest rates and aim to print even more money to fix the problems that they themselves have created, capital will flow into alternative means of wealth storage. The decentralized nature, easy accessibility, and ubiquity of Bitcoin make it incredibly appealing to citizens who have had their governments crack down on them via capital controls, money printing, and taxation. Whenever governments do these things, markets push up the price of Bitcoin in response. Bitcoin's ease and essentially no transfer costs give it an edge over its competitors as well. Its anonymity and privacy are also very appealing. Much like gold, Bitcoin is finite by its very nature, and that makes it likely to appreciate over time as it becomes more accepted worldwide. The digital currency has been called a get-rich-quick scheme, but it may only seem that way because the current fiat system is a get-poor-slowly scheme. Without legal tender laws and central bank monopolies, free markets would undoubtedly choose money that appreciated over time, opposed to the current system which gradually robs individuals of purchasing power through inflation. Bitcoin transactions involve no third parties, which means there's no opportunity for seizure or taxation. Exchanges have been compromised in the past, but Bitcoins themselves are almost impossible to steal. The coin's blockchain technology and ledger system are revolutionary. However, Bitcoin is still in its beginning. That means continued price volatility and that it's still not as widely accepted as most fiat currencies. There's also countless competing cryptocurrencies that are presently trading for pennies. They use the exact same hashing algorithm as Bitcoin. These competitors could eventually pose a threat, but Bitcoin is an early mover in this market, and that will be incredibly valuable during the next crisis. Remember, as Bitcoin becomes more expensive, miners could turn towards its competitors. Bitcoin's lack of intrinsic value is another issue that is often put forth. It means that the coin's worth is heavily dependent upon its advanced blockchain network. Time will tell if that can be sustained. I do see why there are concerns about not being able to melt down or practically use Bitcoin in everyday life. They're incredibly reliant upon the internet and only exist virtually. Gold, on the other hand, has a track record of being a store of intrinsic value for thousands of years. However, transferring and storing bars of gold is incredibly expensive. It's also heavily regulated and subject to severe manipulation and state intervention. There are currently 293 ounces of paper gold for every ounce of physical. Record leverage distorting the market. Now, it's true that Bitcoin could face regulatory problems in the future, but there's already a set precedent of gold confiscation in America thanks to FDR's seizure of all private gold in 1933. Unless the government completely shuts down the internet, Bitcoin can't be stopped. So I think it comes out the winner in the regulatory comparison. There have also been efforts to combine Bitcoin with gold in payment systems, which I see as bullish for both of them. Other digital currencies backed by gold are interesting, but again, they are centralized and will have more overhead costs and regulations. In conclusion, we must acknowledge that the current massive warfare and welfare states simply could not exist without the government's current ability to print money from nothing and indebt the unborn. Governmental currency monopolies are finally being challenged and undermined by Bitcoin. And that is a good thing because the current price for money is nothing. And as they say, you get what you pay for. Governments and central banks are not immune to the consequences of mathematical unsustainability, and Bitcoin will thrive as that becomes more apparent. Thanks so much everyone for watching. Let me know what you think in the comments below, and don't forget to subscribe if you're new. See you next time.